This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial endowment expert, Harold Siegel. We're taping the show on July 24th, 2014. Our time is 8:44 Mountain. Our radio show runs on your favorite radio stations. Also, the shows are archived on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. We have a podcast. It's through iTunes. If you have iTunes on your portable device or computer, type in World Financial Report on Radio. You can find us there. The radio show is portable. We go anywhere you do. And as we tape today's show, I guess it's really no surprise, a lot of problems geopolitically. With Russia and the Ukraine, some serious concerns there. Obviously, what's happening in Gaza in relation to Israel and Hamas. And on the inflation side, the price of beef and bacon reach an all-time high. And Harold, it's not a surprise to us that we're seeing inflation pressures, especially on the food side of things, and yet at the same time they keep telling us there's no inflation. But it's a time where we really believe you should be building a position in hard assets to offset and obviously be prepared for inflation, and yet at the same time have an insurance policy in your portfolio in relation to a possible war, because you just never know. We could wake up one morning and all of a sudden we have some major conflict due to what's happening in Russia or in Gaza.
Well, you're 100% right, Randy. Again, geopolitically, things are a mess right now and very, very concerning. Obviously, we're watching what's happening in Israel very, very closely. And what's happening in Russia and Ukraine, and the amount of plane crashes in this last week. I believe there was 2 of them, and then, obviously had the plane being shot down. It's really a scary time at this point. You're right also about the food prices. Food prices went up over 25% in the first quarter of this year as people are making less and less money. So that's inflation in its most simplest terms. The government can call it whatever they want, but when your dollar isn't stretching to what you need it to do, that's inflation. The Federal Reserve made huge mistakes. I mean, dropping interest rates from 5% down to 0 has not had the desired effect on the marketplace, and there's many top analysts at this particular point that believe that we're headed for a huge crash in the Dow again. In actual fact, that's inevitable. It has to happen because there's no foundation. It's like building a home with no foundation. Eventually it has to crumble, and that's what's going to happen again in the Dow. There's several indicators out there at this particular point that are showing that this market could absolutely collapse again like it did in 2008. And the fact is that when the problems aren't actually fixed, when the foundation isn't strong enough to build a strong, structure above it, it's eventually going to crumble, and that's unfortunately what's happening at this particular point. What happened in 2008 was catastrophic. We came within minutes of a total collapse of the financial system. If it wasn't for the FDIC in the United States, the insurance company that backs bank accounts, that insures bank accounts, we would probably have seen a total collapse of the money markets, because everybody was so concerned about what's happening with the banks and with what was happening with the marketplace, the stock market mostly, that people started withdrawing their money at record pace. And that's when the FDIC raised the insurance on personal bank accounts from $100,000 to $250,000. That seemed to calm things down at that point, and basically it stopped the run on the banks. But that didn't stop what the problem was. The problem was severe. The banks were in huge trouble. The banks had wrote so many bad loans on mortgages and real estate that were suspicious type of loans that these banks were on the verge of crumbling, as were massive corporations in the United States. We know that General Electric and Chrysler, McDonald's was having huge problems. So many insurance companies, and the biggest insurance companies in North America, were on the verge of crumbling. If the government didn't come in and actually take about $17 trillion and put it back into the stock market at that point to try to calm things down, we again would have seen a total collapse of the stock market. Everybody was selling and everybody was petrified. Well, what they did to try to correct the situation was to continuously lower interest rates, make money available at a very cheap price. On top of that, there was massive debt. So the fact is that this debt is the most dangerous part of the entire scenario that we're talking about. And most of us, understand debt, but on a much smaller basis. As a homeowner and as a business owner, you understand when your business is in trouble and when your debts are too high to pay the bills, when you borrowed so much money to keep your business going that the interest payments alone are stopping you from doing business. And that's basically where the U.S. is right now. They've borrowed and printed so much money and are so heavily in debt that the chances of getting out of debt are slim to next to none. So basically everything that the Federal Reserve has tried to do has not had the desired effects, and over the longer term, this was never going to work. They felt that by putting all this money and righting the ship and getting the markets back on track and salvaging these massive companies like General Motors and Chrysler and these major banks and these major insurance companies, that they would get back on track, they'd start being successful again, they'd start hiring again, and everything would be fine. And in theory, it made sense. And they went ahead and did that. Unfortunately, it has not worked out. And the fact is that the unemployment numbers are a lot worse than what the government is telling us. We're probably sitting within the United States at probably 12 to 15% unemployment, not the 6% unemployment that the government is telling us that we have. The banks, they are in huge trouble. They have never, ever recovered from this crisis in 2008. And in most cases, they still have those debts on their books and all these foreclosed homes. They make it sound like things are getting so much better in the U.S. and the real estate market is increasing and getting stronger. The fact is that it's mostly rentals. People are paying high prices for rentals. And don't forget, when you lose your credit rating, when you don't pay your mortgage or you don't pay your bills, your credit is gone for 7 to 10 years. How can these people that lost all these homes all of a sudden become buyers again? It just doesn't happen. That's fantasy. It's not the real world. So there's no doubt that what the Federal Reserve and the U.S. government did to try to correct things has not worked. And now it's going to start to show in the marketplace. We've seen a rally in the Dow Jones that has taken us from basically 6,500, which was the lowest price when the Dow crumbled in 2008 and 9, and now it's all the way back up to 17,000. How in the world does a market like the Dow Jones, like the stock market here in the United States, which is supposed to reflect the strength of the overall economy, how in the world does that hit record levels when none of this is happening? There's so many companies in trouble. There's so much unemployment. Again, the economy, especially for the middle class in the United States, is pathetic, and it shows up in the stock market in stocks like Walmart and companies like that. There's absolutely no way that this particular rally in the Dow is going to last. It's been a fake rally. It's been a manipulated rally to show that things are getting better in the U.S. And in actual fact, how in the world does the stock market go from 6,500 to 17,000 when the economy is so pathetic? So again, every indication is that this market is getting ready to crash again. And if you have your money sitting in the stock market, if you're in your 50s, 60s, and 70s and this market crumbles again like it has a very good chance of doing, your chance of making back your money is slim to next to none. The smart thing to do right now is all about capital preservation. Making money today in markets and investments is very difficult to do because they're not the markets of the 90s. We've got a totally different scenario going on right now, and the risks are the strongest and highest that they have ever been. I urge you to be conservative. I urge you to understand how complicated the markets are right now and how dangerous they are. And as Randy said at the beginning of the show, we could wake up any morning and find a repeat of 2008 because all the problems that happened in 2008 have not been dealt with at this point. It's like putting a Band-Aid on open heart surgery. Eventually, it's going to open up again. And that's exactly what we feel is happening in the market right now. These rallies in the Dow have not been strong. And again, there's no reason for this market to continue to move like this with potentially high inflation and, again, interest rates down at zero. So, again, The markets are going to coast during the summer. They always do. The summer's not the strongest time for precious metals. Gold's hovering at around $1,300. Silver's hovering at around $21. We're still very, very bullish on those markets. I'm a firm believer that gold is going to not only surpass 1,900, but it's going to go substantially higher than that. And silver's going to go past 50 and probably double or triple from that. There's shortages in that market. The other thing is that nobody really talks about right now is how it's very, very likely that there's very little gold in the world that these countries are holding. I think the United States doesn't have gold. I don't think England holds any gold. I think that China and Russia are holding all the gold, and so is India. So the fact is you've got two different mentalities. You've got the West that is saying, you know, this is what we believe is going to happen with the economy, and we're buying all the gold that's possible. And then you've got the U.S. and Britain and countries like that believe the opposite. I personally believe in gold. I personally believe in hard assets. That's why we've been doing the show for 15 years. And I put my money where my mouth is. I own gold. I'm buying more gold. I am a firm believer in silver. I think it's going to go to double or triple the $50 price that we saw before, and I'm a firm believer in diamonds, probably one of the most important assets you could ever own if you're concerned about capital preservation and then capital appreciation. Diamonds, rare diamonds, give you both of those opportunities. So, again, these markets are dangerous. We are predicting that we are going to see a massive fall in the Dow coming up within the foreseeable near future. And if you are sitting in that marketplace, you either better have stops in the market to protect yourself or go on the sidelines right now, because, again, you never, ever know when this is going to happen. And this is a lethargic market. There's no way in the world that the stock market is a strong market to have your money in right now. I personally don't have a penny. All of my money is sitting right now in physical gold and silver, most of it in diamonds, and I do have a lot of cash on hand because there will be opportunities moving forward to take advantage of those. Again, physical, hard assets is where your money should be at this point. Diversification is extremely important, and don't take unnecessary risks. Speculation at this time could absolutely kill you financially.
Speak with Harold about hard assets. The most secure and profitable investment, millions of years in the making, rare-colored diamonds. Diamonds are nature's art, private, portable, stable wealth. Speak with Harold today about starting your own diamond investment portfolio, or receive a free copy of the weekly World Financial Report on Radio newsletter by going to our websites, rarecoloreddiamonds.com, rarecoloreddiamonds.com. Harold has an auction site as well you can take a look at. We'll have auctions again coming up in October, hsfineauctions.com. Take a look around and see what we've done in the past. Everything is building month after month after month. We're having more successful auctions. And obviously, recently, we did an outstanding job raising money for breast cancer. And that was the Susan G. Komen Breast Cancer Foundation. $70,000 went to that Breast Cancer Foundation as a result of the auction that Harold held late in the spring. If you'd like to take a look at our auction site, it's hsfineauctions.com. We'll announce our next auction coming up later in the fall. And rarecoloreddiamonds.com. It's like going to the world's most amazing museum for rare diamonds. Investment diamonds. Speak with Harold. 1-800-432-1022, 1-800-432-1022, or rarecoloreddiamonds.com. You want investments that governments cannot print. And Harold was touching on the fact that we're in a situation where things really have not changed since the financial crisis. And he's absolutely right. In fact, it was interesting to note that the New York Federal Reserve slammed Deutsche Bank and its $55 trillion in derivatives. It accused it this week of significant operational risk. Deutsche Bank's giant U.S. operations suffer from a litany of serious problems, including shoddy financial reporting, inadequate auditing and oversight, and weak technology systems. So there's a bank right there, Deutsche Bank, that's in serious trouble, and that is being brought forward by the Federal Reserve of the United States. Also, Credit Suisse to exit commodities, and they're posting a major quarterly loss. In fact, they're getting out of commodities, and they're paying a $2.6 billion fine to settle a U.S. tax investigation, and that is their biggest loss since 2008. One of the other things that you can find in our newsletter, and get our free weekly newsletter from Herald. It's the companion to our radio show. If you were getting it from another source, you're no longer getting the World Financial Report on Radio newsletter. Get your name on the list with Herald, 1-800-432-1022 or rarecoloreddiamonds.com. The dollar's 70-year dominance is coming to an end. Within a decade, the greenback could be replaced as the world's reserve currency. That is a must-read story in our newsletter as well. The BRICS, Brazil, Russia, India, China, are shaking up the global economic architecture. They are meeting and looking at coming up with their own. Well, we have the Federal Reserve in the United States. We have the Bank of Canada. There's obviously banking entities all around the world. They're looking at developing their own for the BRICS. And that would obviously put a lot of pressure on the U.S. dollar, as it would obviously like to continue to be a reserve currency, but it's not. We talk about what's happening in the United States. Atlantic City, the credit rating has been cut to junk by Moody's because the gambling hub is basically suffering in a major way. Their credit rating cut to junk. Detroit, in bankruptcy. Flint, Michigan, talking about heading to bankruptcy. Detroit, we had this story, I guess it was about a month ago. Water shutoffs were happening for those that could not pay their bills, and roughly 50% of the people in Detroit could not pay their water bill. As a result, they were getting shut off. A judge has suspended that for 15 days. And one of the things that I think is quite interesting in our newsletter this week, stunning images, and this is a sequence of images, how a Detroit block changed in just 7 years. You see the initial picture of a normal block of houses, a normal street, people living there happily, and in 7 years they have multiple pictures. And it's absolutely shocking to see what happens. In fact, in Detroit, insurance fraud remains the top motive to burn your home down. Revenge is the second, if you can believe that. One of the stories in our newsletter this week from Greg Hunter, he interviewed Rob Kirby. And I think he's right on the mark when he says on the price of gold and why it's not taking off with all the global chaos. Kirby says, if we had free markets, gold would be going up in spades. We effectively have a goon squad that comes in and clobbers the price of gold with paper contracts. They will dump tons and tons of paper contracts in the market, and there is no gold to back up those contracts. Kirby also says physical gold and especially silver supplies are tight. I would say the issue in silver is more extreme than gold. In the next 3 months, we could see some extremely significant advances in the price of both gold and silver, and I think there's a very, very, very good chance that's exactly what we are going to see. In fact, one of the things that really hints to the markets being suppressed, at least in the short term, because we believe that they won't be able to do it in the long term. This is sort of an interesting statistic. Gene Ahrensberg came out and said silver was sold Tuesday at $104 million per minute for 30 minutes. They sold paper contracts that equaled $3 billion. Harold, obviously, it's frustrating for those of us who are in hard assets, but we know in the long run, they can't print gold, they can't print diamonds, they can't print silver, they can print a lot of fiat currency, U.S. dollars, other currencies around the world. They can obviously do bail-ins, take money out of bank accounts, or Spain, as we heard about that tax, taking money out of bank accounts. But if you have hard assets in your possession, these are things that are going to be very difficult for them to get at. That's why we advocate having an insurance policy in your portfolio of hard assets at all times.
You're 100% right, Randy. Again, and I believe that's 100% true. If these markets were allowed to trade on their own volition, that we'd be looking at gold above 1,900 and silver above 50. The only reason that the markets fell back in 2011 was because they were made to fall, because there was just too much gold and silver purchased, and there was not enough physical gold and silver in the warehouse, and that's illegal because every contract has got to be backed by physical gold and silver, and that's when they decided to drop the market down. It was so illegal and so rotten of them to do that because, again, in a free market, you're supposed to be able to make your own financial decisions, and if you put up your hard-earned money and you're willing to risk that, you expect to be able to do that on a fair playing field. We're not playing on a fair playing field at this particular point. There's other situations that the governments are much more interested in than gold and silver being able to trade on its own volition. So, again, there's going to be a time within the foreseeable near future that this is going to reverse. You know, the fact that these banks are allowed to short these positions with more silver than exists in the world today, which is the most illegal thing I've ever heard, because, again, there are rules and regulations to trading commodities. I've been in that business 35 years, and every time a commodity person sees what's happening in those markets, we got to shake our heads and say, how in the world did this happen in this country? So, again, we know what's going on at this point. It's a matter of just sitting back and waiting for the right time. And the time is coming very close. When the stock market falls, people are now going to start to get it, because most Americans at this point that are trading stocks feel that they're in a safe position again. It's absolutely incredible to think that they believe that this is actually a bullish market. So, again, we're just sitting back, very conservative, waiting for our time again. Don't forget, we picked this market back in 1999 when nobody else was ever talking about the gold and silver market. Nobody thought that gold and silver was going, and we did our show back in 1999-2000 when gold was at $250 and told everybody, sell your stocks and buy gold and silver, and those markets absolutely skyrocketed. We did it before, and we are going to definitely do it again. There is no doubt in my mind. I'm not a stupid person. I've got millions of my own dollars in these markets, and it's not something that I am emotional about. I'm very comfortable with the position that I'm and my clients are sitting in at this point. I truly 100% believe that we are in the right market for the right reasons, and those reasons will come forward within the very, very near future.
It's interesting. This week, Peter Morici said, history has taught printing too much money usually fires up inflation, and once ignited, inflation is darn painful to douse. That has already occurred in prices for assets like social media stocks, commercial real estate, farmland, and now it's spreading more broadly. Since March, consumer price inflation has accelerated and is now about 4%. People should expect the Fed to flail about, recklessly printing money, and brace for a bout of stagflation, high unemployment, stagnant wages, and rising prices. One way to deflate, obviously, a defeat is, and we're talking about inflation, deflation, stagflation, hard assets. These are things that cannot be printed by central banks. That's why we're advocating having gold, silver, and diamonds in your portfolio. And Harold has rarecoloreddiamonds.com, the website for you to view and take a look at investment diamonds right now. Go to rarecoloreddiamonds.com right now. Take a look at the investment diamonds he has there. You can also connect with him personally and privately at 1-800-432-1022, 1-800-432-1022. rarecoloreddiamonds.com is his website. His auction site, if you'd like to take a look, is hsfineauctions.com. We're going to come back and talk about diamonds exclusively, in particular Argyle diamonds, and we have a stunning featured diamond as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping the show on July 24th, 2014. Our time is 9:09 Mountain. Radio show runs on your favorite radio stations. The shows are archived on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. And definitely know that if you have a portable device, maybe something like a pad of some sort, an iPad or an iPod or an iPhone, can be portable on your device. Go to iTunes on apple.ca, download iTunes, and subscribe to our podcast. Just type in World Financial Report on radio. We are there. You can subscribe. The shows come in every week. We go anywhere you do. So definitely connect with us via the podcast on iTunes. To invest in diamonds, and we're going to talk about diamonds here shortly, speak with Harold personally and privately. Connect with him at rarecoloreddiamonds.com or call him at 1-800-432-1022, 1-800-432-1022. And as I promised, we have a beautiful diamond that is our featured diamond of the week. It's a 1.51 carat, radiant cut, fancy, vivid, yellow, internally flawless. This is a big, chunky, beautiful diamond. And for those that are fans of the television show The Bachelor or The Bachelorette, our show is running obviously at 3 in the afternoon on 6:30 CHED on a Sunday. Tomorrow, Monday, on The Bachelorette, she will be proposed to. The ring that she wanted was colored diamonds. She wanted colored diamonds. So when you see Andy Dorfman get engaged tomorrow, what I was reading online is she wanted colored diamonds, and that is exactly what she got. Now, if you'd like to start your own diamond portfolio, one diamond to start with would be that featured diamond, a 1.51 carat radiant cut, fancy, vivid, yellow, internally flawless. Take a look at it at rarecoloreddiamonds.com. We also have stories in our newsletter this week about the Argyle tender that's going to be starting in August for 2014. Also, the past tender for 2013, if you're interested about the results. And a story from last year around this time about pink diamonds and how outstanding they are as an investment. But Harold, I know that more than likely you won't be watching The Bachelorette, but we will definitely have a picture of Andy's ring next week, and we will put it in our newsletter. But she wanted colored diamonds, and the girl got what she wanted.
Well, that's good. She's supposed to. And it's the rage now. One of my closest friends just got engaged, and he got through us a magnificent 4-carat, fancy, intense yellow, flawless diamond ring that his fiancée has never taken off, and everybody is just commenting on her ring. She's so proud. She told us last night how beautiful and how much she loves the ring. So colored diamonds are the rage, there's no doubt about it, but investment-wise, they're a phenomenal investment. When we talk about capital preservation, about an asset that doesn't decline, that you won't lose your money in, that holds its value, that's a rare colored diamond. And that's the business that we're in. The diamond business mostly consists of rough diamonds being mined, sold to cutters and polishers, and those diamonds are cut into white diamonds, mostly for jewelry. Our business is totally different than that. Our business deals in the investment aspect of the business, because there are certain diamonds that are phenomenal investments. And I'm not necessarily talking about the multi-million-dollar diamonds. I'm talking about more medium-priced diamonds that are affordable, to hard-working families that just want the right deal. You put your money in the bank, you're maybe getting 2% return, and we all know, especially after last week's show, how unsafe the banks are. We're predicting that many banks are going to go under, and we're going to have another banking crisis. So again, keeping your money in the bank at 2% when your taxes and inflation are higher than that, you're losing money putting your money in the bank. It forces people back into a very risky stock market that we believe, and many others believe, is about to crumble again. So again, where do you look to put your money where you can preserve the capital, where you're not going to lose it because all of a sudden the traders decide to go negative on the market? Gold and silver, commodities, stocks, and bonds all trade on exchanges where you have buyers and sellers that all have their own impression of the market, and that's how you can either go long or short in stocks and commodities. But in diamonds, there's never been a situation like this. Diamonds have gone up in price because we know through private sales and through auctions that certain prices have increased substantially. We built a secondary market for diamonds. We pit buyers and sellers together. That's what we do. Just with my experience in the commodity business, what I'm trying to do is create an exchange where diamonds are bought and sold, and that's what we're doing, and it's become very, very successful. H. Siegel Fine Auctions, my company that we built a couple of years ago, is doing tremendously well. Our auctions have been not only very effective and very profitable, but on top of that, it's catching the attention of major corporations. last week I was in Dallas for a Susan G. Komen breast cancer charity brainstorming meeting with their top partners, which are American Airlines and Bank of America and Walgreens, some of the biggest corporations in the United States and Canada. And basically, we were brainstorming for 3 days, and our virtual auction business was one of the highlights of the entire discussion, because nobody else in the world, no other company has what we have. We have got the only virtual auction business where people can attend our live auctions from anywhere in the world. If you're in China, you can sit down on your computer, and when we have our auctions, you can participate. You can bid on our diamonds from anywhere in the world. And this is exactly what we wanted. When we looked to build this secondary market, this business, it had to be perfect. It had to be credible. It had to be live and almost real time, and that's exactly what it is. We have less than a half a second delay on our auction, and it's been very, very successful. The last auction that we did in May, before we took a break for the summer, we raised money for a very important charity. To me, the Susan G. Komen Breast Cancer Charity is a tremendous charity because what the people do is incredible. And the founder, Nancy Brinker, was the sister of Susan G. Komen, and when Susan was dying of breast cancer, she made Nancy make a promise to her that she would do everything in her power to make certain that women stop dying from this horrible disease. And Nancy made this promise to her sister, took $20 and a Rolodex, and turned it into one of the biggest charities in the world. They've raised over $2 billion. And where it's mostly a woman's disease, why would men be involved in this? Because we have mothers and grandmothers and sisters, and we've got wives and daughters and granddaughters, and we care. So basically, we started raising a lot of money for this charity, and again, are considered one of their strongest partners. So we will have, in October, another major auction coming up. And those of you that did participate in the last auction know that there was some phenomenal pieces of jewelry, some unbelievable pieces, like a 5-carat emerald cut white diamond ring that was valued at $250,000 that somebody bought for about $125,000. There was a 1-carat pink diamond up there that was worth over $350,000. There was amazing pieces. We took the Susan G. Komen breast cancer ribbon and turned it into an iconic piece that we did out of pink sapphires and that we did out of pink diamonds. And the first one that we sold at auction sold for $22,000, with most of the money going to the charity. So again, we intend to continue with this. Our auction business will grow and grow, and it is something that you definitely want to attend. So we'll let you know well in advance when the next auction is. It's going to be coming up in October, and it is going to be for the charity, which means that you will get a write-off on top of that. So we're very excited about what's happening in the diamond business, and we have been approached by other charities that would like to do something similar because, again, it's very difficult to raise money in these times. The fact is that the markets are very, very suspect. People with smart money understand what's going on. It's unfortunately the general public that gets into the market at the wrong time. They end up losing their money. We're saying to be conservative. We're saying to go with alternative investments like hard assets. We've been approached by Fox News, a new show that's just come out with Deidre Bolton called Risk and Reward, which we will be going on in the near future. And basically, the reason that Bloomberg and Fox News has us on is because of alternative investments, because they believe that that's, part of the investment structure that you should be looking at. Investments that aren't paper, that you hold in your hand, that are safe and reliable. How many times I've traveled with my wife wherever we've gone, and whatever ring that she is wearing at the time, is sometimes in the hundreds of thousands or the millions of dollars. Diamonds are portable private wealth. And if you read the newsletters and you watch the financial news and you understand what's going on in the world today, you'll understand how important an asset is, like a diamond, where it could be transported to a different country and you could start all over again if you needed to. That's why there's firms called or organizations, for example, the Sovereign Fund, which is basically a company where people are uncomfortable with their money in the United States and are moving assets, mostly hard assets, to different parts of the world. And that's happening in abundance today, and a large part of those assets are in diamonds. Now, again, we do have diamonds that start in the $20,000 range that have a track record. They're yellow flawless diamonds. They've got a track record of increasing by about 15% a year. You want to hold on to these diamonds for at least 10 years. A $20,000 investment today is worth about $75,000 in 10 years from now. You put that same $20,000 into any other investment, and you have no idea what you're going to end up with. But in the rare yellow flawless diamond market, it's got a track record. They're very difficult to get. There's maybe only 100 cut for the entire year, and these are the type of diamonds that you want to own and put away for your future. Because you put away a diamond for 20, 30, 40 years, and you could see returns that are unbelievable. To give you an example, I bought a 2-carat vivid purplish pink Argyle diamond in 2003 at the Argyle tender that Randy was talking about. I paid $350,000 for it 10 years ago. That diamond is worth close to $4 million today. My wife's girlfriend was sitting at lunch a few months ago with a 5-carat pink diamond ring on her finger. When I asked her about it, she said it was her grandmother's. Her grandmother bought it 50 years ago for $50,000, and the diamond today is worth close to $5 million. There was a diamond sold last month, a vivid blue diamond that sold for $17.5 million. But the interesting thing about it is the same diamond was sold in 1994 for $2.5 million. So in the last 20 years, that diamond has gone from $2.5 million to $17.5 million. My $350,000 investment in a diamond has climbed to close to $4 million in the past 10 years. So this is what we're talking about. The Argyle mine, where my pink diamond came from, is going to close before 2020. There's very few high-quality diamonds coming out of the mine at this particular point, and it's going to get worse and worse. If you're one of the fortunate people to own an Argyle pink diamond moving forward, in the next 6 to 10 years, that diamond that you may be bought for $50,000 could be worth $100, $200, $300, $400,000. There will not be any more pink diamonds once this mine closes. They produce 95% of all the pink diamonds in the world. And the fact is that once this mine is closed, because it's not producing anymore, the price of these diamonds will climb to a level that most people will never believe possible. The fact that this mine is going to close in 6 years means that we're very comfortable that there's no downside to this. There's no way that these diamonds are going to drop in value, unless they found another massive diamond mine, and that's not in the cards at all. In fact, they've looked all over. There is no other mine like the Argyle mine that produces 95% of any kind of diamond, let alone very valuable pinks. So we're in a very, very rare and unique opportunity. This is probably the only time in history that we will ever get an opportunity to invest in a diamond like a pink diamond that is going to be extinct. There's not going to be any more pinks. The only time you'll see a pink diamond come up for sale is when we decide to sell one. Because most of the Argyle pink diamonds that have been purchased over the years have been purchased by jewelers who have made these beautiful diamonds into magnificent pieces of art. And people hold on to those for decades. They hand them down from generation to generation. So when we decide to start to sell some of our diamonds on the market, we'll do it in the proper manner. We'll offer one or two at a time every few months type of thing, but it's only really my clients that are involved in the investment aspect of this business, so we're in a very unique and wonderful position. We really control the investment diamond market at this particular point in pink diamonds, because again, there's nobody that can come on the market and dump a bunch of pink diamonds. That doesn't exist. Very few people own them because they're so rare. They're the most concentrated form of wealth in the world. So we own diamonds starting at $20,000. Our yellow flawless diamonds that have increased by about 15% a year. Then we start getting into these amazing pinks. They're the most concentrated form of wealth in the world. They're small diamonds that are worth an absolute fortune. And seeing that they soon will be gone, the prices will increase substantially. One of the best investments you could make right now is owning an Argyle pink diamond. And the Argyle tender, which is just starting, is the biggest event of the year. That's where they take about 45 to 55 of their biggest and best Argyle diamonds, which are about a half a carat each. That's how small these diamonds are. But they take them on tour to 6 cities around the world, and us very high-end dealers get to look at these diamonds privately and get one bid per diamond that you're interested in. If you know your business, you may be lucky enough to end up with one of these Argyle tender diamonds. I will mention again that one that I bought 10 years ago has increased 1,000% from when I first bought it. That's how valuable these diamonds are. If you're in an opportunity to own one of these diamonds, the investment started about $50,000 for these argyles, and they go up into the high six and low seven figures. But you're talking the most valuable assets in the world today. And as Randy mentioned at the beginning of the show, if the government wants to know what you've got in paper assets, it's very easy. They know how much you have in stocks and in bonds and in real estate and everything about you, how much you make, how much you pay in taxes, everything. But they don't know what you have in diamonds. It's always been that type of investment, and that's one of the things that I love about the diamond market at this point, is that it's portable private wealth that nobody knows that you own. And that's one of the most important things at this particular time that you could ever invest in. If you have money sitting in the stock market, which is at great risk at this particular point, take some of that money out and buy yourself an argyle pink or a yellow flawless diamond. These diamonds will do nothing but make you money over time. They will secure your future for you. And again, we own 8 Siegel Fine Auctions, which is the only company of its kind that can resell your diamonds for you. There's no other company out there that does what we do. Very proud of our company. It's growing and growing. And now that we're involved with charities, again, one of my goals is to align ourselves with high net worth clients that will be able to buy our diamonds down the road type of thing. And that's exactly what we're doing. We're doing that all throughout Europe, and we're doing that throughout the United States and Canada, and it's going extremely well. So, Randy, the diamond market is on fire at this point. It's one of the best places to have your money. And when we talk about two things, capital preservation, which means keeping your money, which is so important today, and capital appreciation, which is making returns on your capital, that's exactly what the rare colored diamond market will do for you, and it's one of the best investments you could make at this particular time.
Speak with Harold personally and privately. He is happy to sit down with you, talk to you on the phone. RareColoredDiamonds.com is the website. The featured diamond of the week is a 1.51 carat radiant cut, fancy, vivid, yellow, internally flawless. Go to RareColoredDiamonds.com, click on the featured diamond of the week. You can see video of the featured diamond there. Harold was mentioning that he is going to be on Fox Business with Deirdre Bolton, and that will be announced very, very soon. We will let you know when that happens. In the past, when Deirdre Bolton was still with Bloomberg, Harold was on, and he was on another time with Carol Masser. He's been on Bloomberg Radio 2 different times. And we have the video from the Carol Masser and the Deirdre Bolton interviews from Bloomberg. If you would like to see those, we can send them out to you. Get our free weekly newsletter from Harold. Stories about the Argyle tender, the 30th anniversary this year. It gets underway in Sydney, Australia. August 14th and 15th will culminate October 2014. As a reminder, we have a story from about a year ago on the 2013 Argyle tender and how they broke records on the value of diamonds sold on a price level. And we have a story about Pretty in Pink. Extremely rare, incredible, valuable pink diamonds are definitely something that people are looking at not only as an investment but something to wear. In fact, in this story, one lady has a pink diamond and she feels comfortable going to some of the most extravagant parties, but at the same time, she'll wear it on a tractor on her farm. So it's one of those things, it's multi-purposed. And you can see that story in our newsletter. Get our free weekly newsletter from Harold, RareColoredDiamonds.com, RareColoredDiamonds.com, or 1-800-432-1022. One thing I think is very important to mention, and we had this story a few weeks ago, Spain said it would introduce a blanket taxation rate of 0.03% on all bank accounts in a move aimed at harmonizing regional tax regimes and generating revenues for the country's cash-strapped autonomous communities. The regulation would bring in about 400 million euros, that's 546 million US dollars. The total deposits, 1.4 trillion euros. And obviously we believe in being honest and ethical, and we're not saying do anything illegal. But if you get into a scenario, and we have a story in our newsletter this week about the Bank of England really pushing for bail-ins, and they're going to be meeting later on in the year with other central banks similar to what happened in Cyprus, where they dip into your bank account and take money out, depending on the amount of money that you have. And you see this, they're calling it a tax, but really it's a bail-in in Spain. If you have a hard asset like gold and silver at home in a safe, if you have diamonds at home in a safe, or obviously safely stored somewhere for you, they can't dip into your bank account and get at your diamonds. They can't get at your gold. And Harold, I think that's a very important thing to remember. They can't get at your hard assets. They can dip into your bank account and take your paper money, though.
They certainly can. They have before, and they will probably do it again. As we discussed at the beginning of the show, the banks are in terrible trouble. They never, ever recovered from 2008 and 9. And all it's going to take is one setback to see, this starting to roll again. And it's a very, very concerning situation, because next time this market falls, it's going to wipe out a major part of the equity in the markets, and it's going to be very, very difficult to make that money back again. Be smart, diversify. Keep some of your money in the assets that you're comfortable with, but put some money into alternative investments. Physical gold, physical silver, and physical diamonds are three of the most important assets you could own at this particular point. And again, time is going to prove whether we're right or wrong. But when you look at it, you're talking about an asset like gold that can't be printed. It's always going to have a value. Even at its worst time in the 1990s, when the U.S. economy was strong and the U.S. dollar was strong and the stock market was strong, gold still had a value of $250 an ounce. And there's times when the U.S. dollar has been pathetic, when it's been worth, next to nothing. And currencies can do that, but gold can never go to zero. And gold has in times backed currencies, and we do believe one of the major reasons that gold could go to $10,000 is because we're a firm believer that China is going to back the yuan with gold, and that could turn out to be the world's reserve currency. So again, with all these scenarios going on and all about to happen, you want to have some assets in those potential markets. And physical gold and physical silver and physical diamonds will get you to where you need to go to. They're going to preserve your capital for you, and under the right situation, make you a ton of money. And that's what we have to look forward to in a very, very bad economy. So again, we will be able to, within the foreseeable near future, bring you physical gold bars at spot prices. I'm working out a deal with some miners in South Africa to be able to bring my clients physical gold at this point that you're going to be able to buy at spot price. No commissions, no fees, no spreads, no nothing. Delivered directly to you just so you can own it. All I care about at this point here is that the listeners to our show and my clients are in the right investments at the right time. I don't care to make money in gold. That will come back, years down the road when our clients have made fortunes in the market. All we care about at this point is that our clients get through these difficult times with the right investments. So within the next few weeks, you will learn about our new gold opportunity, but it's very simple. It's going to be buying physical gold delivered directly to you with no if, ands, or buts. There's no hidden fees. There's no commissions. There's no nothing. We're not charging you anything to sell it. All we want you to do is to be in the right market at the best possible price, which gives you the opportunity. You see, when you buy an asset like gold and there's no commissions or no added fees, if you buy it at $1,300 and it goes to $1,400, you make $100 an ounce. There's nothing else to take away from it. So, again, this is all coming. We care about you. We've been doing the show for going on 15 years now, and nobody cares more for their clients and listeners than Randy and I do. That's why we have continued to do this radio show, even though that the market has been in the doldrums for the last 3 years. We've still continued to bring the show to you every single week because it's important that you have the information that you need to make an intelligent business decision. Where other companies have gotten out of the business because they can't afford to be there anymore, and there's several companies in the gold and silver market that are like that now, we're still here, and we're here for you 100%, and we will always be here for you. So, again, we appreciate you listening to our shows for all these years. We appreciate your business, and just know that we care about you, and we're doing everything that we can to bring you the type of assets that are going to get you through these difficult times and get you into a strong financial posture.
Thank you very much, Harold Siegel.
It's my pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
Speak with Harold personally and privately about investing in hard assets, gold, silver, diamonds. rarecoloreddiamonds.com, rarecoloreddiamonds.com. The telephone number 1-800-432-1022, 1-800-432-1022, rarecoloreddiamonds.com. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.